Hey guys, and welcome back to a new accumulation zone trade recap. Today I will be recapping my trades I took during the London kill zone on SPX 500, and I'm gonna be showing a picture perfect ICT 2022 mentorship entry on gold US dollar. And yeah, we will see what happens. Alright guys, let's start with this video. So right here we're looking at a hourly chart of gold spot US dollar, and now we're starting a new week, so we are doing our weekly routine, which would be marking out the previous week high and the previous week low. So we formed the previous week low here on Wednesday. So we're going to drag this line out. We're not going to make it as thick, but we're going to mark it in red for the sell side liquidity. And here on Thursday, we created our previous week high. We're going to make this one green because according to ICT, he would consider this as buy side liquidity. So now that we marked up our previous week's low and previous week's high, we are ready to start into the next week. We can also mark up the Friday's low right here for sell side liquidity. Make it in red. So now if we have a look at our 15-minute chart of gold spot US dollar, we can clearly see that our Friday low right here at 8:30 was formed on Friday. We already marked this level out, and right here is where Monday begins. That's when the markets opened at 6 p.m. New York local time here on Sunday. So let's get started. We saw that during the early beginnings of the Asian kill zone, basically this whole area until the midnight open was a consolidation. We moved down and we formed a double bottom setup right here. So right here there would have been a beautiful double bottom setup, and we did not went a tick below this Friday's low. So we basically formed the ultimate sell side liquidity target according to ICT. So now if we are looking what happened during the London kill zone is we moved outside of this Asian range, we retested it, and we broke out bullish. We continued going upwards above Friday's high and above the previous week's high, where all the buy side liquidity is resting above. Let's make it clear. We're going to write buy side liquidity here. It's our buy side, and that's our short-term sell side. Let's put this below. And this is our long-term sell side. Alright guys, now that we already know where our liquidity is laying, our idea, we can already draw out what we want to see. Now, we took out the previous week high, the previous day high. That's where we would ideally look for short opportunities, because now market makers trap long traders into a position above the previous week high, making a tiny little wick above the previous week high on a higher time frame. And what do we get? Boom. We got a massive bearish engulfing candlestick. So let's have a look at it in here on a lower time frame. Let's break it down to a 5-minute time frame. And on this time frame, we can see a beautiful setup forming. So this upper green line is our previous week's high. Now on a 5-minute time frame, after turning on the bank secrets indicator with the 25 pip boxes and the 50 pip boxes, we can see that we trap volume long above the 100 pip level here at 1760 on gold US dollar. We went a little bit above this 25 pip box here. This is the 25 pip box right here, this whole area. We went a little bit above it. And what we did right here, we had similar highs. So we have relative equal highs right here, forming new buy side liquidity above the weekly buy side liquidity. We also formed equal lows right here. So we had made a new high, came back lower, formed a new higher high, and now this is our short-term low. Right here, we can write short-term low, and we broke this short-term low. So out of this short-term low, we created a change of character in the bearish direction. So now, according to ICT, we're above buy side liquidity. We had a change of character into the bearish direction. Now we would be searching for fair value gaps on a 5-minute to 1-minute time frame. So let's actually have a look here. So those are our 5-minute fair value gaps. Let's break it down to a 1-minute chart. And we basically see the same fair value gaps happening here. We had some sort of this last bullish candle within this move that formed our change of character, was our last resort right here for gold above the previous week high, above buy side liquidity. So right here we had a beautiful, we can also use the Fibonacci tool for example. We almost reached the optimum trade entry. We only scratched the, I think, let me actually pull it up. We hit the 61.8 Fibonacci level. We consolidated within this area, filling in this fair value gap right here. And boom, we dropped. So now that we figured out where we already entered, according to the ICT concept, let's say we wouldn't have hit the perfect entry and we would have gotten an entry maybe somewhere here with spreads and everything. Our stop loss would have been right above this swings high, or even this swings high, above basically the highest high that we formed so far. So our entry wasn't perfect according to ICT setup. Let's go back to a 5-minute time frame. But our target would have been clear, our short-term sell side liquidity above, below those beautiful equal lows. So this would have been our target, and that would have been a beautiful 5.892 risk to reward above buy side liquidity, above the previous week's high, with a beautiful optimum trade entry inside of a fair value gap right here in a premium, basically selling at a discount right here at the short-term sell side liquidity. And we hit it with this beautiful wick. I entered into a short position. Let me actually gonna show you the chart right here. This is what I traded today. Let me turn on the Scalping Pro right up here. So we basically had the London Open here where they pumped price up above the previous high. We had a bearish divergence here on the Scalping Pro on a 5 and 1 minute time frame, which also gave me a little bit more confidence to get into this trade. My alert was triggered above this previous week high. And yeah, we saw this massive bearish divergence here on a 1 minute chart. Let me actually pull it up. Now let's actually have a look at my active chart that I used during my trading. So we can see that we formed on a 1 minute chart, we formed a bearish divergence. We continuously formed higher highs on the price chart. But at the same time, we had our peak formation here on the Scalping Pro way above the bearish reversal zone. So we were looking already for a short opportunity. Now we see price continuing higher, working this high of the day, maybe even the high of the week, already formed on Monday with a bearish divergence. So I was already looking for shorts here, but now I wanted to see the confirmation here from the change of character. And we got it here. We broke this equal low right here, dropped below it, and pulled back into the 1 minute and 5 minute fair value gap that I already pointed out earlier. And if we now go back to a higher time frame, we can see this trade played out beautifully. We would have had enough time to enter on one of those 5-minute candles right up here, still above the previous week high, until it finally hits 6:35 New York local time, and we break below significantly with this bearish candle, and we continued lower, 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 lower. That's where I closed my position out, because I was happy with I closed at a 5 risk to reward with my stop loss above this high, above the previous week's high. Worked out beautiful. The next trade I took here on gold spot US dollar was this continuation short trade to this Friday's low, the previous day low right here. Since I did not hold this trade for a full take profit, which would have been down here for a total of a 7.61 risk reward, I took take profits here already because we got close to the 8:30 opening and the 9:30 stock market opening here on gold, and it was a bit too risky for me, so I just took profits at 5-to-1 risk reward. Then I saw this beautiful pullback before I actually wanted to have lunch with my family. And what happened is the stochastic RSI fully reset above the 80 level, so it's completely overbought again. And we got this beautiful bearish engulfing candlestick with a wick to the upside. So buyers tried to move prices up higher, but sellers got into the market selling on all those buyers, and the sellers won basically here. And I entered on this next 5-minute candle when the stochastic RSI crossover was confirmed, and we were already heading back towards the oversold area. The Scalper Pro was still bearish, so that's a perfect opportunity to take this thing short. We went lower. My take profit was set here. My stop loss was set at 50 pips, so I was looking for a 1.5 risk to reward ratio trade. After putting in my stop loss and my take profit, I went downstairs to have lunch with my family, and everything worked out perfectly. I also shared this trade setup here on Telegram. Let me actually pull it up. Yeah, that's right here. When I entered, I was running in profits basically from the beginning. I had my stop loss at 50 pips, my take profit at 70 pips, and it played out beautifully. And if you haven't joined us on Telegram yet, make sure you do. That's where I'm sharing all my explanations, and that's where I'm also keeping everyone updated. For example, this morning I released the Scalper Pro overlay version 2, where I included this new Scalper Pro multi-time frame feature, where you can basically see if the current candle on a 4-hour time frame is bearish according to the Scalper Pro, or if it's bullish. And we also have a new multi-time frame sell and buy signal that basically lets you know when all the time frames align. So if the daily all the way down to a 1-minute time frame aligns right here, that's a S&P 500 index 1-minute chart, we get a multi-time frame sell. And this morning it would have worked out beautifully. To enable it, you simply have to refresh your chart, check your invite only indicators and add it to your chart. Make sure show dashboard is enabled, and that's all you have to do. Now you get the information. You can basically disable everything here on the chart if you only want this dashboard, and you can run with it. If we go through some more things that I shared this morning, those were my SPX 500 trades this morning based on the Scalper Pro stochastic RSI strategy. I saw this massive bullish divergence here. We formed a lower low on the chart, but we formed a higher low on the Scalper Pro. So I actually wanted to go long here, but I waited patiently until the London kill zone started, and I entered long as soon as I got my confirmation from the stochastic RSI. We almost hit take profit here at 2-to-1 risk to reward, but it didn't play out. We did not hit my take profit target, but because we already hit a 1-to-1 risk reward, I moved my stop loss of this first trade here at 220 or something to break even, so I'm not losing or risking any money anymore on this trade. And I entered into a new long position right here at, I think it was 3:05 a.m. New York local time, for another trade because I wanted to see the opening gap from Friday to Monday basically being filled, but we did not make it, and this trade did not hit my 1-to-1 risk reward ratio, after which I would have moved my stop loss to break even. I'm sticking to all the rules here. Today wasn't a great London session for the Scalper Pro stochastic RSI strategy on the S&P 500 index, because this trade was a losing trade, -1%. This one was a break-even trade. Luckily, I made all my losses back on those 2 gold trades. And if we check out, one of our members here left a comment that, no, let's go back to this comment right here. Ragnar, he had a similar setup, but on GBP USD. So I looked it up, and we saw we had also a bullish divergence here, this time on the stochastic RSI. So we crossed over bullish here, made a low, and we formed a even lower low, but at the same time we formed a higher bullish stochastic RSI crossover. So there's bullish divergence here during the early Asian kill zone box, But what he actually did, he waited for a bullish stochastic RSI crossover. At the beginning of the London session, we just consolidated. We got this massive bullish engulfing candlestick, shortly followed by a thin Argo version 2 buy signal. He entered right here on the crossover after the Scalper Pro turned bullish as well, so we turned red on those two candles. Went bullish again right here on this candle, and all the entries or all the parameters agree, and the trade eventually hit our take profit at 2-to-1 risk reward. We can actually have a look at it on a real trading view chart. This is what the trade would have looked like that Ragnar took here on GBP USD. Perfect trade setup. I totally understand his reasoning why he did not enter prior to the London opening here at 3 a.m. We consider the kill zone from 2 a.m. basically when the Frankfurt Stock Exchange is opening up in Germany here. So because it is British pound and that's basically when the London session is starting, you can usually expect some volatility, some sort of a fake out before it actually continues in the direction they want to take it. So if we have a look at orders here, we can clearly see we had a fake out to a different direction, to a short direction, trapping traders short right in here. We got our bullish stochastic RSI crossover with a bullish engulfing candle 5 minutes after the 3 a.m. opening here, the London stock market opening right here at 3 a.m. New York local time. The Scalper Pro turned bullish shortly afterwards right on this candle. So he entered in here, placed a stop loss somewhere around this area, even if you would have taken the full wick stop loss or maybe a 20 pip stop loss, it would have easily hit your 2-to-1 risk to reward ratio take profit target, after which we had a bearish engulfing candle continuing in some sort of consolidation right around here above the VWAP before breaking down to the downside below the VWAP, retesting the VWAP, continuing in a sideways movement. That's everything that happened today on British pound US dollar, and I think that's it for my daily trade recap. I hope you enjoyed today's video. If you did so, make sure to drop us a like and make sure to subscribe to our YouTube channel. Alright guys, take care. I will see you tomorrow in the next trade recap.